Hello and welcome, everybody. My name is Dakota Nunley. I'm the Content Strategy Manager here at Udacity, and I'm very excited to be joined by Metin Akyol. He's a quantitative analyst working in the investment industry, a data scientist, and an AI trading expert. Metin, thanks so much for joining me today.
Thanks for having me.
Yeah, I'd love to kick things off, Metin. First off, what do you do? I know you're a quantitative analyst, but kind of curious what exactly that day-to-day looks like and what that job entails.
Yeah, great question. So quantitative analyst is entails sort of a broad range of activities, and typically can be focused on anything along the lines of the entire investment process. That is, the quantitative investment process entails, for instance, doing analysis on existing strategies or developing new strategies, and doing analysis to understand a little better what these strategies are doing well, what could be better about the strategies. And basically, you can think of it as using any type of quantitative approach to improve the investment outcome for investors in a nutshell.
Great, yeah, thank you. And beyond that, I'm curious how you got here. So, did you always have a goal of stepping into this sort of role or something in this um, market in general, or did it emerge gradually? I'd love to, if you could talk us through that progression.
Yeah, gradually is probably the right description of how I got into this. That is, I studied economics in school, and kind of was always interested kind of in this intersection of quantitative research and economics and finance and sort of financial markets and the dynamics that happen there, and trying to understand a little bit better what sort of occurs in the markets and how it can be explained. And as I was sort of doing my research when I was in grad school, I was kind of stumbling, if you will, more and more into kind of the field of data science or machine learning. At the time, this wasn't necessarily called that. That terminology kind of just, I would say, recently emerged over the last couple of 2 decades, I would say. And my sort of approach into that was more so driven by curiosity about some of the quantitative methods and trying to explain a little bit better what was happening in the markets using these methods. And when I came out of grad school, naturally, sort of the financial markets were kind of something I was drawn to or interested in. And at the time, I remember I was seeing a lot of posts for data scientists, and I didn't quite know what that was, but kind of discovered over the course of time that a lot of the job description had a lot of overlap with my background and my skills. A lot of the methods were just called something different than what I was used to, but then I realized, oh, this is something that you could actually do. And that's how I kind of stumbled into that, I would say. So it was a gradual approach, as you were saying. That is, this is kind of how I stumbled into that, and then over the course of time really enjoyed it because it was giving me sort of the chance of really sort of leveraging some of the things that I'd learned in school with something that I was very passionate about, namely, again, sort of the dynamics in financial markets and understanding a little bit better what was happening there. And yeah, that was kind of how I got into this.
Yeah, thank you. And you had mentioned in grad school how there was a lot of skill overlap with the topics and things you were learning, but curious if there are any specific upskilling or professional experience or schooling experience that you did undertake along the way to make you qualified for the field.
Yeah, definitely. That's a good point. Yeah, I would say the schooling pretty much gets you kind of only part way there. I think there's a lot that still needs to happen after that. So I would say I continuously used sort of online programs that basically allowed me to either learn new methods or relearn existing methods. I kind of took basically an approach where I tried to, well, partly if I needed to learn a new method because I realized this is a method I needed to know for a certain task, obviously learn that method as quickly as possible using some of the tools available out there, the courses out there. But what I also try to do every now and then on a regular basis is try to take courses that were sort of giving a general overview of some of the methods in the industry. Some of them I already knew, some of them were new to me, but nevertheless, I always found that I typically got something out of it. That is, even if it was something that I had done myself or taught myself, even, I oftentimes found that just seeing this again presented by somebody else sometimes gave me sort of a new insight about it or a new way of looking at it. And oftentimes I kind of took something out of it. So I tried to basically continuously just learn new things as new technologies emerge or relearn existing technologies, because I found sometimes that previously existing methods that I had used had changed over the course of time, or the best practices had changed over the course of time, and there were better ways of doing things, more efficient ways of doing things. So that has been something that has always been kind of something I try to engage in as much as possible.
Into financial markets, stock trading, this age of AI that we find ourselves in. I'm curious, how long has AI been on your radar professionally and a legitimate factor and role and work for you?
I would say without my knowledge, it has been kind of on my radar for a long time. Like I mentioned, I used AI for a long, or similar methods that kind of can be compared to AI. For instance, reinforcement learning in my PhD thesis back in the day. At the time, I was not aware of the fact that this kind of fell under that maybe umbrella that you could classify as AI. Like I said, that terminology also emerged or changed over the course of time, and these definitions have changed. And as a result of that, I would say it has been kind of with me for a long time, but not necessarily sort of front and center as a terminology as AI. And I would say in terms of in my work particularly, my first role was actually that of a data scientist, where I had to use some of these methods right away. That is, I would say this has been kind of front and center. Nevertheless, I would say in the role, or in the work that I'm doing, the role of quantitative analyst, I would say this has been kind of gradually becoming more and more important. That is, it used to be sort of maybe a sort of side factor, if you will. That is, you would do a little bit of AI sort of to and enhance some of the existing methods that we had, but it became sort of over the course of time, I think, more and more prominently featured in the approaches. I would say it's still not necessarily, I would say, taking on sort of the majority of the work. That is, there are still a lot of things that are done sort of maybe in traditional ways, but it's becoming more and more important, I would say. So it's, I would say, a gradual process that kind of transitions over there into that direction.
Yeah, and getting a bit or going further into that, how has AI changed the role of a quantitative analyst? And are there specific tasks and processes that have been completely transformed? I know you mentioned the core still seems to be intact there, but I'm curious to learn more there.
Yeah, absolutely. The core, I would say, definitely is still relatively I don't want to say unchanged, but still focused on maybe traditional methods. The traditional methods being somewhat along the lines of what you could think of as regression models, if you will. As this has been typically an approach that has for a long time been maybe one of the main approaches used within the context of quantitative analysis. But there's definitely sort of been sort of a transition over to some of those AI methods. And again, I don't want to draw sort of a separation between the two. Oftentimes, regression falls within that umbrella of AI, if you will. But I would say not necessarily that specific tasks have sort of been replaced, but I would say more so that the analysis has become simply maybe more well-rounded. That is, we're using more methods now, I would say, that we have used before. That is, we can in sort of include sort of different types of analyses that we haven't done before. So I would say the research, or AI, is basically, for a quantitative analyst, at the end of the day, a tool that the quantitative analyst uses. And I would say as a result of that, there's not necessarily sort of a task that has been replaced, but more so the quantitative analyst has been simply become more productive and using more different approaches in terms of analyzing what we did already before.
But I'm curious, in your opinion, when it comes to AI's impact on finance and trading, what's something that's being talked about too much and something that's being talked about too little?
Top of my head, I would say some of the methods I think could be included more, as I would think, particularly of unsupervised methods. That is, those are typically in my opinion, not used enough to give a better understanding of what we're actually seeing in the markets, to analyze a little bit better what sort of the dynamics are. Because oftentimes the immediate thought when we think about AI within at least the investment industry, I would say, specifically when it comes to developing investment strategies, is sort of these prediction models that give us a chance to sort of generate more or higher returns with existing risk, for instance. And I think one thing that particularly I think delivers a lot of insights in terms of getting a better understanding of what actually drives some of those factors is the unsupervised methods that oftentimes don't get enough attention, in my opinion. Because one of the criticisms that AI also, and machine learning models oftentimes again, is sort of the idea of this black box that we don't fully understand what they're actually doing, and we don't fully, similar to a regression analysis, don't fully understand exactly what is the driving force for making a decision. And I think unsupervised methods can sometimes bridge that gap a little bit, in the sense that they can sort of identify a little bit more what we are seeing, and something that we might not have been aware of, that can sort of identify some of those factors that for instance, that nobody might have thought of, but that give us sort of the opportunity to leverage some of that, the tools there, to again generate insights that weren't there before, that nobody, or basically answer questions that nobody has asked before.
Yeah, interesting. Yeah, thank you. I saw a recent report in Bloomberg that kind of was doing the rounds that highlighted how AI models had recently outperformed some human traders. And I'm curious if you can just speak more about this advancement and what it means for the space at large, and if it's how accurate it is, or is it more just clickbait?
Well, I would say, generally speaking, there has been a transition within the investment industry towards quantitative methods, and within that, AI. Again, the terminology obviously is a little bit broad, and depending on how you define that, different things fall under that umbrella. And I would say, generally speaking, that transition has been driven sort of by this desire to get results that are maybe empirically sort of can be backed up by empirical evidence. That is, we can do a back test, or we can say, well, if you had hypothetically run this type of strategy for a long period of time over decades, this is the performance you would have received. And with sort of the human trader approach, this is something that we typically can't quite replicate. That is, we can't obviously have a human sort of follow this sort of approach and replicate their trade for a long period of time and then get sort of a back test, and that kind of makes it sometimes difficult to predict that into the future. That being said, there is still obviously a lot of folks that are doing this. The human trader approach is obviously something that is still around, and I think also has its merits. And with that said, I would say, generally speaking, my impression is that we're moving more and more into that direction of doing this quantitatively with a systematic approach, simply because of the fact that the industry as a whole is kind of struggling with this extremely low signal to noise ratio. As a result of that, it's already very difficult to identify whether something actually is pure luck or there is actually skill behind that. And with a quantitative approach, we typically have somewhat maybe more reliable way of assessing whether this is actual skill. With the human approach, then we typically have this problem that you might have that performance over long periods of time, but do we know, can you continue to do that, or is that something that can be replicated going forward? And without wanting to sort of pick sides, one versus the other, my impression is simply that the industry seems to be transitioning more and more towards that sort of quantitative approach, simply because of the fact that we have some kind of way of backing this up with empirical evidence. So, and in terms of actually answering your question, whether there is the capability of outperforming that, I would say there have been strong performances on both sides, in both camps in that regard. Again, without wanting to pick sides, I would say AI-driven models have done well, but there are also models that are struggling, because oftentimes we find this sort of results that is holding up very well in a back test and then can't be reproduced out of sample for various reasons. So there's been sort of advantages and disadvantages of both sides. So I would say it's definitely not surprising to me to find that some of these are doing better. And I would say over the course of time, they probably will be also improved more and more. And yeah, it remains to be seen. But my impression is definitely that is a direction in which we're headed. And we're definitely going into that direction. I think that, or has largely already happened. So I would say, yeah, I'm not surprised to find a result like this. And I would imagine that it's probably going to get better over the course of time.
Yeah, thank you, Mateen. I'm curious, how do you personally balance the use of AI-driven insights with traditional financial analysis methods?
Yeah, that's a great question. I think it's typically necessary to combine both a little bit. That is the traditional financial analysis where we want to have, or also for lack of a better term, just a general sort of understanding of what actually drives some of the results that we are producing with, let's say, AI methods or AI-driven insights. That is, there's typically also these two sort of camps of thought when it comes to that. That is, there is this thought process of wanting to be sure that we understand always what we are producing with machine learning models. That is, this is sort of this traditional approach where we want to produce results, but we want to be able to explain them. On the other hand, you have this extreme sort of view that we don't necessarily need to understand it as long as it produces results. The late Jim Simons, was a proponent of this approach to say, well, sometimes we can't actually explain it, but if it produces results, then it produces results. So, but I would say, generally speaking, we want to make sure that we have some kind of way of at least having some kind of underlying rationale why we're seeing what we're seeing. So oftentimes machine learning models can produce results or can make predictions that can be hard to understand or look like a black box. And I would argue where the traditional financial analysis comes in, or maybe sort of those traditional methods, is where we need to then bring our domain expertise into play and need to use that to develop a better understanding of what we're actually seeing, and also develop thereby a better understanding and trust into those models. Because that, I would say, is sort of one of the biggest challenges for some of these AI methods, and the lack of adaptation, which is the lack of trust to an extent. That is, we oftentimes have this black box and don't fully understand it. But as we kind of combine this with domain expertise and better methods, we can get a better understanding and also be more comfortable using these methods along the lines of maybe traditional methods that had been used before, like regression analysis and the likes.
Yeah, thank you. And I'm also curious too. When we see, so we talked about, what AI is good at in this field, and there's things left to be desired. What's something that you wish it would get figured out sooner than later in terms of what AI can and can't do in your sector?
I would say what would be great, and I kind of alluded to this earlier, is the sort of um, framework that would allow us to develop a solid understanding for what are the factors that make an AI model do what it's doing. That is, have a sort of framework similar to regression analysis, where we can analyze, is the model sound? Have we sort of done sort of our homework? That is, with regression analysis, we have a lot of checks that we can kind of run, and sort of tests that we can run that we're familiar with. And we know sort of problems that are kind of, or what type of problems can cause what type of results, and can kind of lead to sort of underperformance of the models. And I would say this kind of sound framework is something that we're still lacking to an extent with the machine learning models. That is, there's still not, to my knowledge, not this sort of sound framework where these are the assumptions that we have, like in a regression model, that need to be met in order for this model to work the way it's intended to work. But rather, oftentimes we kind of assume this must be probably working right, and we assess the performance typically based on out of sample tests, and as long as the results look good, we are comfortable with it. But I would say this is kind of something I wish we would have, at least within the investment industry, would get to sooner rather than later, because I think that would help the adaptation a lot. And again, every industry kind of has its own kind of struggles, obviously, but I think that's been one of, at least from my experience, one of the main challenges, or one of the main shortcomings that AI hopefully still can deliver at some point.
Yeah, great, great. Shifting gears a bit into, specific skills and career trajectory and advice. You mentioned at the start of the conversation how you found your way into this field. Based on, your journey, your experience, what advice would you give to other professionals who aspire to be where you are?
I would say education obviously is the number one item. That is, building their skill set, adding to their skill set with the latest technology, with the latest AI developments, staying on top, obviously, in terms of the latest developments, following sort of the research in that area. There's a plethora of new research that comes out that is oftentimes hard to keep up with, but I would say that would be one item to kind of stay on top of, to see kind of what are the latest developments and learn sort of these new technologies. Because again, I think a huge advantage is sort of in terms of in this field, having the ability to adapt these tools before others do, and or even be behind sort of driving some of those developments. That is, my next recommendation would be cross-disciplinary. That is, doing cross-disciplinary research, sort of trying to understand what are others doing, what are other fields doing. Maybe we can use some of those tools for us. I found that one of the most successful methods that have been sort of adapted over the years were oftentimes taken from other fields that we're already doing something along those lines, and then basically bring that over to finance, where you necessarily might, well, with hindsight, oftentimes say, oh yeah, obviously that is a good method that you can use, but oftentimes before doing so, nobody can think of it. And I would say that has been something that I found always very interesting, and that I think also is a huge opportunity for folks that are coming from different industries, that kind of bring a different expertise with them, that have learned different methods. Because oftentimes, otherwise, you have sort of this room full of people that have all kind of the same background of econ and finance, and everybody's kind of familiar with the same methods, but bringing new methods to the table, I think, has been a huge plus, in my opinion, especially again, in environments where it's important to deliver sort of very quick results in terms of investment strategies. And I think that's been a huge factor. So again, generally speaking, I would say any type of building expertise, building skills, but also, yeah, sort of reaching out or reaching into other areas and other fields has been sort of a huge plus in my opinion.
Thank you. And just a quick follow-up, if you have any top of mind, is there, in terms of uh, pulling best practices or these insights from a different field into finance, is there a example or is there an example that stands out?
I would say it's difficult to pick a particular example because specifically with quantitative analysts, you were asking me earlier about what the job entails, and it's such a broad field to an extent in terms of the work that you're doing that it's sometimes a little you have to give a vague answer in terms of you have to do quantitative research along the lines of the investment process, and that as a result of that, I would also say the skills are not necessarily such that there's this one skill that you should really have, but rather I would say it should be a mixture of different skills. One in particular I would say that is definitely a must is the coding skills. Um, Particularly Python these days is one of the top languages, but other languages as well with different employers. I would say that is one of the main skills that are necessary to simply do the analysis oftentimes that comes with it. And then also quantitative skills, that is statistics and mathematics, just to have sort of the framework, the mental framework to know how to kind of assess strategies, how to analyze results. And I would say that the stronger your skills are there, that can definitely be a huge plus in terms of, again, being able to understand what you're looking at, having sort of the tools in the back of your mind, what tools might be necessary. That allows you also to, again, I mentioned this earlier, when you kind of think of different fields, bring in different approaches from different fields if you are familiar with methods. So I would say are the two main things. That is a healthy mix of programming skills and quantitative skills is typically I would say a good starting point.
Yeah, thank you. I'm I'm wondering, in terms of you, as you had alluded to earlier, the noise versus what's actually worthwhile to prepare for, whether that's skills or news or where the industry is going. How do you personally keep up with the industry?
Yeah, it's a great question. Generally, I would say following publications, research that is see sort of what the latest developments are. There's a lot of obviously research in the field that kind of gives you ideas often enough of new methods that are taken from, say, different fields that are brought into finance. I would say conferences is also always a good way to kind of force yourself to kind of see the latest developments. That is that way you kind of often enough also learn a little bit new methods that are not necessarily on your radar. That's been my experience typically from attending conferences that in the field, that often enough you might think, well, this is not related to what I'm doing at all, but afterwards you realize actually I could be using this method because there is something in there that is helpful to what I'm doing, or they're using some specific method to prepare the data in such a way that could be useful to you as well. So I found that again, the exchange with others in the field has been extremely helpful. And I would say, generally speaking, from my experience, the AI field and or quantitative finance field has been typically very collaborative, at least within sort of the research environment, to sort of share at least best practices or general ideas in that regard. So I would say what I've been doing again is kind of following the research, the new developments, new methods, but also again conferences I found that have been really sort of eye-opening in many ways, because again, oftentimes you think you're kind of on top of things, but there is a new method that you have not kind of noticed at all that's been kind of evolving. And yeah, so I would say those two typically have been, for me at least, helpful in terms of keeping up sort of with the latest developments.
So clearly, education, upskilling is important to you. Can you talk us through that?
Sure. I would say it has been extremely helpful to me because I found that the interaction, the exchange with students has always been very helpful to me in terms of challenging me towards rethinking what we're actually doing. That is, I found this exchange always helpful, for one, because I like the idea of giving back to the next generation, that is helping students kind of coming into the field and learning these methods. I've always found that extremely rewarding when I saw students kind of delve into this and enjoy doing this and learning from this, and oftentimes, obviously, be successful with these methods. But what I also enjoy in that regard is the teaching typically challenges you to question what you're doing, why you're doing it. As you oftentimes get the question, well, why are you guys using this method? Why not the other method? Couldn't you use the same method here that you've been using over there? And oftentimes that forces you to kind of break out of the cycle that we're typically in when we're doing something for a long time, because we're thinking, well, we've always done it like that. But then you question, well, why have we always done it like that? Couldn't we actually use this method over here? So that has been something, one of the, I would say, apart from, again, from giving back to the community, that is something that has been sort of personally always challenging for me, because it's not always that easy to answer that question, because often enough, again, you kind of fall back to, well, that's because everybody's doing it that way. But I found that that has been something that has been helpful to me in sort of developing my skills. But also oftentimes it's a refresher, because you're using methods a lot, for instance, in certain areas, but others you're not constantly exposed to. And that way you kind of force yourself to kind of go through those again. And that kind of also oftentimes helps me to kind of strengthen my skills, because then I'm seeing that method again, then you're realizing, oh, I actually could be using this method maybe over here. So it's kind of like a refresher for yourself often enough, where you kind of get sort of a review of some of those methods that you haven't used in a while.
Students are a great mirror in that sense, and
Yeah.
teaching is one of the best ways to learn. Yeah, thank you, Mateen. And regarding the AI trading strategies Nanodegree program, would love to learn, what does your course cover and what sort of professional would benefit from this course?
Yeah, so the course is starting with what I found often enough was one of the most challenging parts, to me personally, back in the day when I got into this field, but also oftentimes from my experience working with students, for them to get going in the preparation of the data. That is oftentimes getting the data into a format that is then conducive to doing financial analysis or conducting again research that can then build the machine learning models on top of that, has been something that a lot of times students have struggled with. So the course kind of starts picking up students with basic Python skills and basic mathematics and statistics skills, picking them up, building this data set from scratch with sort of data to analyze and preparing it to make it then basically ready to go for the analysis. So that's the beginning. And then we basically from there transition over to some of those unsupervised methods that I mentioned earlier, to give sort of a chance to understand some of the data better and see sort of what are the ways how we can discover patterns in there that we might not necessarily be looking for, and identify sort of relationships that might be there that we might not necessarily be aware of. And then we transition from there very quickly into building a machine learning model. That is, we from there use the supervised methods to then build trading models from there, and have sort of there at this point a framework where we can use then to evaluate the performance of these methods. We then compare these methods to benchmarks to get a sense of how are they doing compared to let's say the broader market. And finally, we wrap things up then with a chapter on reinforcement learning, where we combine kind of the best of both worlds. That is the unsupervised learning approach and the supervised learning approach, to get a better sense of how we can sort of adapt our methods and be a little bit more flexible in sort of defining our target. And that gives us typically a chance to then build really flexible models that are kind of cater towards the needs of what we're trying to achieve. So the course overall is, I would say, gives a very good sort of introduction into the field, from building again the data sets from ground up from the beginning, and then goes very quickly into building our own trading models that systematically trade on their own, and we can evaluate them and see sort of what the performance of them are to make sure that we actually have something that delivers returns or strong returns.
Perfect. Yeah, I'm personally excited to to dive into it too. So thank you for that. Yeah, last question here for me. When it comes to AI, the intersection of AI and finance and AI trading, is there anything we didn't cover today that you'd like to leave us with?
I would say generally, or maybe one recommendation I would have to folks who are trying to get into this field, come into it sort of with this curiosity in mind that, again, there is a lot still to discover. There is still a lot of methods out there that we have just barely started using, and that can give us sort of a lot of opportunity. And that is, I would sort of encourage students who are kind of entering this field, or folks who have been sort of maybe in different industries who are trying to approach this field. And I say this to my students often, as well. That is, there is still a lot sort of to be discovered in this field. It's a relatively, I would say, open in the sense that there's a lot of potential that you can engage in or test out new ideas. In that regard, it is can be extremely rewarding. At the same breath, it is also extremely important, however, to bring the skills and do the homework, that is to be able to have sort of a solid foundation in terms of knowing how to assess whether what you actually have developed actually works. That is, I would say, as long as you can kind of keep that balance between being critical of what you have developed, but also having sort of at least sort of excitement and confidence that there is something to be achieved there. I think that combination of those two factors and balancing those two factors, that is the enthusiasm, but also the skepticism, whether what you actually have done works, I think can be extremely rewarding in this field. So yeah, I would definitely encourage folks to try this out and explore this, because it's a very, has been, for me at least, a very rewarding experience.
Yeah, I love that. Thank you. All right. Well, thank you so much, Mateen, and thanks for everybody for stopping by. Hope that you uncovered some valuable insights and inspiring takeaways during this discussion. And if you want to forge your future in tech, AI, or related fields, be sure to check out Udacity's new AI Trading Strategies Nanodegree program and the rest of our catalog. Thanks for stopping by, and we'll see you soon.